Hello everybody and welcome to Trade with Precision free newsletter. It's the 19th of May 2015 and I'm Tamar Mehr. Today I want to take a look at the index market, mainly because the Dow Jones has closed at the highest point ever, and we also actually broke up from this big channel, this level of consolidation that we were at for a good couple of weeks. So as you can see, we couldn't break higher, couldn't break lower, we're stuck in this range. Finally, we broke up above that level and closed above that level, so that looks quite bullish. From the daily, we also back into an uptrend and the indicator are pushing higher as well. But if we take a look at the weekly, we can see this strong level of resistance here at 18,200. However, the indicators are diverging and pushing lower, which could indicate a loss of momentum. But let's take a look at the monthly, and what we can spot from the monthly is that we are in a nice uptrend over here. We're tracking the moving averages. We had a small pullback, move away, small pullback, move away. Over here we had a deeper pullback, still staying in the buy zone, moving away. Last month we had an indecision candle, and this month we already broke above the high of that candle, so that is quite a bullish sign from the monthly. Let's move a region into Europe and have a look at the DAX. Now the DAX at the first 3 months of this year had a major run, as we can see over here. From the monthly, we basically managed to have 20% gain on the DAX in those 3 months. We had a pullback coming in April, and so far for this month we have a bullish candle. We are overextended from the averages though on this monthly, but still in a beautiful uptrend. On the weekly, what we can see is this pullback happening. We are rejecting this level of around 1100 or 11200 thereabout. We're still in the buy zone, and right now bullish candle over here, and so far for this week another bullish candle. But let's see how it translates to the daily, because what we can spot from the daily is we do have a level of resistance overhead. So 11700 is now proving quite a strong resistance. If the market can go up and break the high of this candle all the way above this high, then the daily will move into an uptrend, and then we'll have the daily, weekly and monthly again in agreement. We needed that pullback. We were very overextended. So looking to see if the market can break above this high, and then I'll look for a continuation of the uptrend. However, there is another level on the way around the 1200 as well, but that is a 300 points away. Let's move into another index, and I want to take a look at the Hang Seng. Now with the Hang Seng, we had a very strong run. We pushed all the way. Once we broke this 25,000 level over here, we broke higher and moved all the way up above the 28 level, right up to here, 28 and a half or thereabout. But then we couldn't hold. We pulled back into the 28 level, couldn't hold, and break down below it. Now we consolidated underneath it. Again, the market is actually looking to be in an uptrend. We've got a low, a high, a higher low, and then a higher high, but it's not a very strong uptrend. This high is just slightly higher than this previous high. This low is just slightly higher than this previous low, and we couldn't close above. So we couldn't close above this level, and the main level over here is 28,000. So looking for market to break above this level to seek a continuation of this uptrend. However, if the market again find resistance at this level, I'll be looking to be a seller from this level and continuing lower until the next level over here of 27,000. So looking at this higher time frame give us an indication of where the market is likely to go next. But how do we trade it? Well, what I like to do is go down the time frame and actually have a look at the tick charts, because they to me are more representative of price when I'm looking at lower time frame trading, and I am looking to employ the same trading strategies as I'm looking at for say 4 hours or 8 hour charts on Forex. I'll basically utilize my same trading strategies only on different time frame. And as you can see over here, just looking at the 250 ticks, we already have a nice uptrend going on here, nice opportunities as the market pull back into the buy zone and looking to move away from the tick charts perspective until we come up into the next level of resistance around the 28,000. There's a lot of room to move when I'm looking at lower time frame. So if you would like to know more about how we trade, then please join us on our next free webinar. The topic is high performance trading for a busy lifestyle. In this webinar, we are going to look at a trading strategy that is suitable to any market and any time frame, and that opened for us endless trading opportunities. We have two different time options available for this webinar this week. The first one is on Wednesday, the 20th of May. It's going to be on 3 p.m. New York, 8 p.m. London, 5 a.m. Sydney, and 7 a.m. Auckland the next day. The other date is on Thursday, the 21st of May, and it's going to be at 9 a.m. London, 6 p.m. Sydney, and 8 p.m. Auckland. Wishing you a fantastic trading week, and I'll speak to you soon. Bye for now.